afternoon. Welcome to Crypto, Bubble or Not, which we promises to be an engaging presentation from Luke Kerner. I'm certainly excited about it. My name is David Harden. I'm a partner at a Hong Kong-based private equity fund, and we invested in a company that became Block One. Block One is developing an open source operating system for the blockchain. Through an ICO that began last summer, they have now raised $1.5 billion US. The ICO continues through June, at which point they will have raised roughly 20 to 30 times the capital they need to build their tech, which is a pretty good trick. So along the way, I'd like to share very briefly, three things that I've learned. First, buying Bitcoin now is not anything like buying Amazon in 1998. They're not related. However, blockchain may be exactly like the tulip mania, which gets yelled at me often at dinner parties. What people don't realize is that the Dutch dominated agribusiness for the next 2 centuries after that Ottoman episode. And third, if you put anything about Bitcoin or crypto on your LinkedIn, you become a target for hackers and thieves, which means that Lou is much braver than I am, or he has better security, because Lou is an outspoken, well-published advocate for cryptocurrency. His Medium tagline tells us, with subtle nuance, crypto is the biggest thing to happen in the history of mankind. That may be a spoiler for whether bubble or not. Lou's a founding partner at CryptoOracle, a crypto VC and advisory firm focused on blockchain, cryptocurrency, smart contracts, and decentralization. He's been a crypto enthusiast, investor, public speaker, and thought leader since 2013. He's currently numbered among the most influential crypto bloggers on Medium, and I will say that his blog is definitely worth reading. His posts are very short, they're very accessible, they're very understandable to a non-tech reader. Just a couple of days ago, Lou made some very useful and I thought illuminating discerning points about the differences between security tokens and utility tokens. And given the SEC's announcement this morning, perhaps a little prescient as well. Prior to crypto, Lou has a long distinguished history in private equity and technology, and the through line through it all is innovation. I actually remember dusting off the shards of the dot-com bubble, and I had just begun a second career writing television when I first heard of a Lou Kerner company, because that was when Lou launched .TV Corp out of Idea Lab and the tiny island nation of Tuvalu. So it is no surprise to see him at the forefront of the current trends in cryptography. So with that, I will give you Lou Kerner.
Thanks, David. I'm going to hire him as my marketing director. So thanks a lot for having me here. Real quick, I am a VC with CryptoOracle. We invest in companies that are in the process of tokenizing any time from an idea on a napkin up to and including an ICO. Previous to that, to VC's third thing I did, the first thing I was an equity analyst at Goldman. I then ran a couple digital companies, including the top-level domain .tv, angel invested and became a VC. And one of the first things about crypto, it's like a bunch of analogies that I have, and one of them is that the analogy to being into crypto is kind of like being in jail, in that the first thing you do when you meet somebody in jail is you go, hey, what are you in for? And in crypto, very quickly you ask somebody, hey, how did you get into crypto? Everybody's got their own crypto story. A lot of them have very sad parts to it. My favorite crypto tweet is from 2011. Some guy tweeted, I can't believe I sold all my Bitcoin at 6 cents. It's 80 cents now. So, everybody has a sad story. My kind of sad story starts in 2013. I literally read a business article on Bitcoin and how it was starting to scale rapidly. I have the pleasure, when I want to learn about something, I can hold a conference call. So I held a conference call with 4 of the smartest people at that time on crypto. I've done 50 of these calls in the last 7 years. This is the only one the Wall Street Journal live blogged, and they said that they were on a conference call being held by Lou Kerner, Wall Street's Bitcoin expert, after 1 week. That's what I was in 2013. And for about a year, I describe it about a quarter of my time. I looked at the light, but I did not see the light. It was a lot dimmer then than it is now. Fast forward to 2017, when ICO started going up and to the right in June of 2000, I held a conference call with 4 thought leaders on ICOs. And literally, for me, on that conference call, I had what's called a gestalt shift. One moment, I saw the world as one thing. The next is something completely different. I really came to the belief on that call, as I write on Twitter, that this is the biggest thing to happen in the history of humanity. The main thing I do when I want to learn is, there's a great William Faulkner quote where he says, I don't know what I think of anything until I read what I've written about it. And so I start writing, so I started feverishly writing. I was in a manic state for 4 months. After 6 weeks of publishing for 6 weeks on Medium, and that's where everything on crypto is written about. Medium's awesome, real people doing real stuff, talking about what they're doing. 95% of what I read about crypto, I read on Medium. And after 6 weeks of publishing on crypto on Medium, I got an email saying, congratulations, you're a top writer on Bitcoin on Medium. And I saw that they have an algorithm. I was the 48th top writer on Medium, yapping about crypto. And I wrote for another 7 weeks. After which I finally felt I had a framework. I wrote a piece called 7 Thoughts on Crypto after 3 months down the rabbit hole. After that, I was the 3rd most influential blogger on Medium on crypto. This was in October, and when you're that, you're a thought leader in crypto, and my life has changed dramatically. It's crazy. One of the highlights in crypto by a very wide margin, the most sophisticated financial institution is Fidelity. They have more than 50 full-time people on staff doing nothing but thinking about crypto. I don't think anybody else has 10. And they also have a crypto club where they have more than 5,000 of their employees from around the world belong to the crypto club, and every month they invite somebody to come up and yap about crypto. In November it was Vitalik, and in December it was me telling Fidelity about crypto. And this is a presentation that I wrote for them, which is really kind of 7 thoughts on crypto. And the first is, what is crypto? One of the early things when you got something really early like this, and everybody's using words like crypto, and to everybody it means something different. For me, it's 4 technologies that are enabling a 5th thing. The 4 technologies are blockchain, which I think of as truth. The second is cryptocurrency, and I have a big problem with that name because we all think it's being used as though they're all currencies. They're not all currencies. There are 20 or 30 of them that are maybe currencies. There are more than 2,000 of them. The vast majority of these are just companies that are using this thing, cryptocurrency, which I think of as being like frequent flyer miles more than anything else. But they are an amazing new way of engaging with your customer and gamifying the customer experience. But most of these companies are not cryptocurrency companies. They're other things. The analogy I use, it's like one day there wasn't any electricity, and then there was electricity, and then a restaurant became the first restaurant to offer electricity and have lights, and people came there and called an electric company because they use lights, this new technology. Most of these are just new companies that are using this new technology called cryptocurrency. The most obviously famous one, Bitcoin, which actually is a currency. The third is smart contracts, which is this technology that lives on top of blockchains. They're simply if this, then that statements. And these are just algorithms, and the amazing thing about if this, then that is they're only limited by your imagination. And if this, then that, smart contracts have the ability to make anything, which is a broad statement. The fourth is zero-knowledge proof. This is the least well-known of all of these that I think of. Zero-knowledge proof, just real quick, how many people here know what that is? Anybody? Anybody? Okay, a few people. So, one of the big problems with blockchain, public blockchains, is enterprises don't want to put their information on the blockchain because they want to keep it private. Zero-knowledge proof enables you to prove whatever you want to prove to people without actually showing them anything. It's kind of like magic. It's what's going to enable enterprises to use public blockchains, which is going to be a big thing. And the best example to help understand what it is, imagine trying to convince a guy who is colorblind that you have 2 different colored cue balls. Well, you ask that colorblind guy to put the 2 balls behind his back and show you one. And you show him one, and you go, that's the white one. And then they show me another one, that's the white one again. Show him, and he does that 7 or 8 times. He's never seen anything, but he's pretty sure he's got 2 different colored cue balls. That's zero-knowledge proof. And the 4 of these in combination, each one of these, I mean, everybody talks about blockchain, but in my view, these are all equally epic technologies over time. The four of these are all enabling in a major way for the first time in human history decentralization, which are organizations that can be run just based on algorithms. You don't need a man in the middle. It's going to be a big thing. It's not going to be everything, but it's going to be more tomorrow than it is today, and more in a week than tomorrow. And at a macro at a macro level, I think of this like the Cambrian explosion. And that 540 million years ago, there was a single cell lives and double cell lives, and then all of a sudden you had these new technologies or new things like nitrogen and oxygen and heat, and it was warming up the world, and you had this explosion of life. And over the next 80, 90 million years, there were millions of new life forms that came into being. Most of them died out, but the ones that were left were at the epic life forms like us that exist today, and that's what's going on in crypto. Yesterday there were no companies. Today there are 2,000. Tomorrow there'll be 20,000. In a week there'll be 200,000. Most of them will die out, but the ones that are left are going to be the Facebooks and Amazons and Googles of this next generation of technology. And as a VC, that's what we're working to find. And so the first thing on the 7 thoughts is nobody knows anything. This is a brand new thing. It's incredibly dense. The only thing that I know for sure is whatever it's going to be is something totally different than what anybody thinks it's going to be because of the world of possibilities. And so this is the first thing, really, nobody knows anything, and that's part of what makes it so exciting to be a part of. Second thing is, when I first went down the rabbit hole in 2013, one of my problems was Bitcoin is just a confidence game. The only way if I bought Bitcoin I was going to make money was if somebody dumber than me came along and paid even more money than I paid. And it wasn't until I actually realized that everything is a confidence game. Facebook is a confidence game. I was the first bull on, I wrote a report on Facebook in 2010, the first, and for me it was an amazing company. I had tremendous confidence till the last report. I lost all confidence in the company, became a bear. Everything's a confidence game. The closest thing to Bitcoin is gold in terms of just being a confidence game, 5,000-year confidence game, going great. I think Bitcoin is going to be a better gold. Gold's at 8 trillion. Bitcoin's at about 200 billion today, so a lot of turns to go if Bitcoin overtakes gold. Today, the biggest thing in tokens and utility tokens and tokenization is utility tokens. Utility tokens are a thing. But in my view, the far, far, far bigger thing is security tokens, is the idea in round figures you have $70 trillion of publicly traded assets in the world today. There's 10 to 20 times that a number of privately held assets that could be tokenized. And every day more of them will be tokenized with security tokens. So you can raise money globally and it's immediately liquid. So, and you become 10, 20, 30% more valuable the day you're tokenized because now you're liquid and people pay for liquidity. And so there's something that I'm coining, wrote an article a couple days ago called The Flippening on when the value of security token issuance gets bigger than utility token issuance, and I think it's going to be next year. The fourth thing, so decentralization is going to be highly disruptive. There's things coming on, and when I first became aware, okay, decentralization, who's going to get decentralized first? The first thing I thought of, well, who makes the most money from sitting there in the middle and controlling everything that goes on? Well, that guy's probably the guy has the highest net margin. So I just did a Google search, and the most, pharma, generic has the highest net margin, and I was a little pissed about the second, which is investment managers, which is a lot of us in the room, including me. So we are likely to get disrupted, why this meme in VC kind of became a thing for a while, because this is what's going on, right? There's a new wave for these companies to raise money. The last 3 things that I'm going to finish with are the 3 questions that I get asked most when I go around and talk. And the first is, what's going to make crypto go mainstream? And I have a personal story for me that illuminates that. And does anybody here know what Lazy Sunday is? Anybody? Anybody? What's Lazy Sunday? What? No, Lazy Sunday is an Andy Samberg video. And when the second company I ran was called Bolt, the largest social network in the world. In 2006, I wanted to get into video. I looked at buying 3 companies. One was called YouTube. One was called Yashi. I bought Yashi. It's twice as big as YouTube. Fast forward 3 months, I think we were 3 times bigger than YouTube. And then one day, somebody uploaded Lazy Sunday onto YouTube. And that day, YouTube became the fastest growing website in the history of the world. 6 months later, Google bought them for $1.6 billion. 4 years later, I get a call from Chad Hurley saying, hey, we're having our 5-year birthday party. we'd like you to come down in San Francisco and tell the story of how you called us. That was the first time we thought that maybe we were a company. So I said, great. So I flew out there. I said, hey, Chad, and I couldn't help myself when I saw him. I said, hey, you know, if they had uploaded Lazy Sunday onto Bolt, we would have been YouTube. And he laughed. He said, of course you would have been YouTube. He said, but why would my brother have uploaded it to your site? Which to me tells you two things. One, when his brother uploaded it up, he had no idea that it was going to be the biggest thing in the history of the internet. The second thing was you know, so it's lightning in a bottle. But the second thing is, turns out there's some things you can do to enhance your chances of getting lightning in a bottle. And in my view to this question, you know, the biggest difference between the internet, and I was there at the beginning, and now this is the internet. The people who went into the internet were from all over the spectrum. Some were successful, some not so much. It was a new thing. People just did it because it was a new thing. Now, the smartest people in the world, every day, I get to spend my life with the smartest people on the planet who left Goldman or McKinsey or some other amazing job somewhere to do this because they have no choice doing this. So the smartest people in the world with all these new amazing technologies, I have no doubt that the Lazy Sunday moment in crypto is coming soon. Second is, what are the regulators going to do? It's the second of the three questions. And I don't spend a whole lot of my time thinking about regulations. I try to spend my time on stuff that I can actually solve for. I'm not going to solve for regulations. But my macro view is very simple. And that's that the regulators have two choices. They can roll out the red tape, or they can roll out the red carpet. And they roll out the red tape at their own peril, because the genie's left the bottle. This is happening. It doesn't matter what they do. If they shut it down here, it'll just go someplace else. Today, none of the best ICOs in the world take money from US investors because we have an uncertain regulatory environment. So they're just going everywhere else in the world and raising the money. As a VC, I have to set up a Cayman Island entity so I can invest in the best ICOs in the world because they don't want to come here because of our regulatory environment. And then the last thing, which is the title of this talk, is the crypto bubble isn't a bubble, it's a ... This is the most read piece I ever wrote was a blog post with this title. And I preface it by saying that when you think about a bubble, you have to think that as humans, we think in a linear fashion, and technology gets to grows in an S-curve fashion. And so we get all excited about something, and then it's much smaller than we think it's going to be, so then we think it's not a thing, and then it ends up being much bigger than we ever thought it would be. And this actually has a name, Amari's Law. He was a professor at Stanford in the early 70s, and he wrote a law that said we tend to overestimate the impact of major technology breakthroughs in the short run and underestimate the impact in the long run. That's everything. That'll be crypto too. And so to answer the question about the bubble, I'm just going to show three graphs. The first graph is Amazon's share price from 97 to 99. It's up 70x. And is that a bubble? Well, if you extend that out 2 years, and now it's 97 to 01, it's down 95% in the next 2 years. So up 70x, down 90x. Is that a bubble and a crash? If you add 17 years onto that, so bring it up to present day, that's what it looks like. And so was that a bubble and a crash? Well, in the context of time now, no, it's just a blip. And it's, I'm pretty sure from what I'm seeing, we're here with crypto. There are a lot of challenges that we have to get there where I'm pretty sure it's going to be in 20 years. But, all the craziness that's going on now, and there's definitely craziness, but we'll look back, I think, in 20 years and laugh at how, all the amazing opportunities that were available, and what most people were talking about was a bubble. So thank you. I think we have time for a few minutes for questions. Look, this is a new technology, and like every new technology, generally incumbents struggle to leverage it and become major players, in new technologies. So, Amazon's obviously an amazing company, and it's my assumption at the margin too, everything else being equal, the company with the most customers to start with has a big advantage. So, a big major tsunami that's coming, everybody talks about ICOs of, when companies on, with a white paper, nothing. The massive tsunami that's coming is existing entities that, existing digital companies or existing assets. So it's not nothing, but just tokenizing. Sure. So that's great. So the first thing that I did when I saw the light, so it's like, oh my God, this is going to happen. And first thing, well, how am I going to make money off it? So the first thing on Wall Street Analyst, I'm going to be the Mary Meeker of crypto. And so I spent the next week, and I realized, oh my God, there's already a Mary Meeker of crypto. It's his 25-year-old kid, Chris Berniski. And then I said, well, you know what? It's okay. I'll be the Michael Parekh of crypto. And Michael was a Goldman analyst. And Mary was at Morgan. He probably didn't make as much money as Mary, but he still did okay. And I spent another 3 weeks like digging into it, looking at all the work. And I don't think valuing utility tokens is a thing. You know, all the work that's going on is incredibly theoretical. You know, it's you know, and the Chris Berniski, I think, does great work. I think it's not because of a model that I ran on it that said how valuable it was going to be. But if I thought there were other reasons that I could buy it and make money, then that's kind of what I'm in business for.
How do you suggest people invest in this trend? You say most of the companies are going to fail, but there will be some that are huge. How does kind of the average person take advantage of it?
So, I mean, the basic prism is, you know, for me, is I said, okay, it's 93, 94 internet all over again, right? It's just unbelievable. I mean, I think it's going to be much bigger than the internet, but, you know, that's the only thing in my lifetime that I have to compare it to. So if I went back to 93, 94, what would I do? And that's what became, you know, raise a fund and do 40 to 50 investments, and it's the science of VC. That's how you optimize your chances of getting the Facebooks and Googles, because nobody knows, right? Nobody knew that Google was going to be, obviously. Well, and I should know this. I feel sorry that I know, but the most, like at the atomic level of Bitcoin is a Satoshi. And I didn't mean to know what a Satoshi's worth, but it's a very small number. So, I mean, I hear what you're saying, and I understand what you're saying. It's so nonsensical to me and so illogical. I realize people act illogically, right? I mean, I've had, you know, cabbies tell me, yeah, you know, I bought Ripple because Bitcoin's 10,000 and Ripple's 50 cents. And if Ripple turns into Bitcoin, so, you know, obviously there's a lot of that going on, but I don't think in the long run that goes up. I don't think that happens in the long run. In the short run, it does. Going once? Going twice?
What's your predictions for regulations on this in the future?
Again, I'm not a regulation. I'm spending very little mind share on it. The regulators are going to regulate. It's in their job title. Whether they over-regulate it or under-regulate it, the pendulum just swings from side to side. You know, the most interesting thing on the regulatory front, though, is the kind of fight to be the self-regulating entity of crypto, which is in and of itself so anti-crypto. Yeah, and what the government does, you know, we'll all find out about it as they figure it out. I don't think they know what they're doing. Cool, and I think now we've got a panel. It's going to be next. Other folks? I thought it was 2:30, and then there was a panel from 2:30 to 3. Yeah. Oh, I'm sorry, I'm looking at a clock. Ah, that's off then. Okay. Any other questions? I can go on and on about this. So, you know, one of the things, you know, one of the things that, yeah, so I say I devote my mind share to 4 things: macro, the 2 biggest problems we have, which is token economics and governance and consensus, right? When you take the man out of the middle, that's awesome. But unless you have a way to have a governance that, so your thing is able to evolve and get better because the world's going to change, and if you can't change with it, then you're like Bitcoin, which is this thing that can't really change so much. And so the good thing is, to replace gold, it doesn't have to change. To be a currency, it does. So that's why it's unfathomable to me it'll be a currency. But the fourth thing that I'm spending time on, which is the most amazing thing about crypto by a wide margin, is how it's going to make the world a better place for billions and billions of people. I mean, it is crazy, all these massive world problems that can now be solved with this new technologies. I held a conference call a couple months ago on social good with the head of blockchain for UNICEF, and they're leveraging the blockchain to create identity for the 24 million kids in the world that have no identity papers, right? That's the amazing thing that's going on, you know, in crypto and social good. In my company, we just started something called Crypto Tuesdays for Social Good in New York. People just getting together and talking about social good, and it's going to be I think it's going to be the biggest by a wide margin area of crypto. Yep. So the question was, when is the blockchain going to be scaled? And so look, we're at the very beginning of this. Interestingly, one of the things that I'm most excited as a VC is what are the emerging platforms that billions of people might be using. And you know, at its core, the blockchain technology is a serial thing. So it started with block 1, the Genesis block, then block 2, then block 3. And as a result of its serial nature, it can only go so fast. There's a new technology called the DAG, Direct Acyclic Graph, which is literally using technology at its core from computer networking 30 years ago called Gossip, that enables large mass quantities of blocks to go on the chain simultaneously. So I think that's really, you know, so the most exciting investments we have is in the DAG space, some of them are in the DAG space. And I think that's, that's one of the many, many things that's going to come along and address the scale issue that obviously blockchain needs to address. Well, right, there are an ever-increasing number of blockchains. And so, right, which blockchain is going to be the best? Is it going to be like search engines? Is there going to be one? Or is it going to be like flavors of ice cream where we all have certain flavors that we like? It's hard to tell which way it's going to go.
Do you foresee a possible future when blockchains never live up to their promise? And if you do you think it's because of technology or regulation that it will be the case?
You're saying if blockchain fails, you think it's the technology? Yeah, I mean, it's funny. It's certainly a reasonable question, but I mean, to me, both of those things, you know, the governments can't stop it because there are other governments that are saying, hey, come here, right? Do it here, because they know that by embracing it, by rolling out the red carpet, they're going to be better off. So the government's already gotten solved for it. And technology, I mean, that to me, it's just like, we've seen technology address all these other things. That it can't address this, which is still, very basic, elemental kind of stuff that they've been doing for a lot of years already. Yeah, it seems to me it'll be addressed.
So a lot of the crypto companies that have done ICOs talk about they create these broad frameworks, but actually, when you look at the commercial use case, it's very limited. When you're investing in companies or in ICOs, are you actually spending time in the commercial use cases, or is it just it's a big market, big opportunity, we'll let the market figure it out?
I think obviously we're doing as much work as we can on whatever it is that they can. One of the really interesting things about this space is for the companies that are actually operating, the massive amounts of now publicly available information that you can get on them, which, it starts at GitHub, but, you can see the activity in their Telegram group, and you can actually see what is the sentiment in their Telegram group. So, the amount of information as a VC who wants to be data-driven that's available in crypto far outpaces that that I was involved with as a normal VC.
Do you think it's better to finance yourself by VC or by tokens?
Better VC or token? Look, if you can go out and do a utility token, which is free money, why wouldn't you, right? I mean, it's free money and you don't have anybody telling you what to do. When you get a security token, I think increasingly what you're going to see is the security tokens that get funded will be those that give rights that people value. And it's not going to be too different from, I think, those successful ones from what a VC wants. And so I think for different people, we'll solve in different ways for VCs and ICOs. I don't think VCs are done. I just think now, there's a new part of the funding stack. Hey, David.
Hacking, cyber issues that are addressed in this market, various levels of the ecosystem?
Sure. So the hacking, it obviously it gets a lot of press in here, but hacking goes on obviously on the internet. So this isn't. I don't think it's a crypto thing. And the assumption is, they're going to continue to solve and get better, but this is, forever, right? Wherever you are, it's a, cat and mouse game, right? That goes on forever and ever and ever. My assumption was there was going to be a panel at some point going on. Well, look, and this has been going on for a while, so this isn't anything new, that there are sovereign countries that have currencies with crazy inflation rates, and holding Bitcoin is like shorting your inflation-driven currency. The problem is Venezuela has made owning Bitcoin illegal. Now, that doesn't stop a lot of people from doing it, but it stops the majority of people from doing it. I think every country is obviously going to issue their own digital currency. It's just it'll be a more functional currency than the paper currency we're used to now. But that will never solve, though, for the issue of how much money the U.S. government is printing, right? That's the coolest thing about Bitcoin is that it's digital and everything, but also we know how much Bitcoin there's going to be, and there's only going to be so much. And the dollar and any other sovereign currency, or to date at least, has never agreed to that.